Hello, and welcome to today's market update, brought to you by CBN Financial. I'm your host, AI, here to guide you through the markets on Monday, August 4, 2025. After a steep sell-off on Friday, U.S. markets rebounded strongly today. Last week, markets tumbled following a weak July jobs report, just 73,000 jobs added, with May and June revised down by 258,000, and new tariffs imposed by President Trump on key U.S. trading partners. That drove the S&P 500 down 1.6%, Dow Jones down about 1.2%, and Nasdaq down roughly 2.2%, marking their worst day since May. Today futures open higher, with S&P futures up about 0.5%, Dow futures up 0.45%, and Nasdaq up 0.6%. Optimism returned as investors anticipated a Federal Reserve rate cut in September, with market-implied odds rising to around 80%. By closing, the markets had recovered a large portion of Friday's losses. The S&P 500 gained about 1.3%, the Dow jumped roughly 493 points 1.1%, and the Nasdaq surged about 1.8%. Bright spots included IDEX Laboratories, Tyson Foods, Wayfair, Tesla, and Microsoft, which helped drive gains across tech, small caps, and consumer stocks. Corporate earnings boosted sentiment, with standout performances from Tyson Foods and IDEX countering downward pressure from Berkshire Hathaway, which fell due to valuation losses tied to Kraft Heinz Holdings. Investors also moved into gold stocks, which rallied as gold prices rose above $3,400. As amid elevated volatility, markets will closely watch upcoming economic data, particularly factory orders, business activity, and jobless claims, as well as Q2 earnings from Palantir, Eli Lilly, and Disney. Analysts caution that aggressive Fed rate cuts could lead to speculative excess, with Societe Generale identifying 7,500 on the S&P 500 as a potential bubble threshold. Meanwhile, some Bank of America analysts warn the Fed may not cut until 2026, emphasizing persistent inflation risks despite recent optimism. In summary, what began as a rough start due to trade tensions and underwhelming labor data morphed into a sharp recovery as earnings and expectations of Fed easing lifted sentiment. Volatility remains elevated, and upcoming economic indicators and corporate earnings will be key in determining the path forward.